Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session. And boy, did we get some extremely strong gains. We will go over what we're dealing with now here, Ken, and some key levels to watch, our thoughts on market conditions. And you've got a couple of stocks for our radar today.
As always, Ali, let's start by staying in the biotech space. Take a look at Harmony Biosciences, which reported earnings recently. It's been holding gains nicely. Also, United Rentals, URI, a nice breakout today. And finally, an emerging leader in the semiconductor sector. Chip stocks had a great day today. Take a look at ACLS Technologies, ACLS.
All right, we'll get to those stocks. But first, a look at the major indexes. We'll start with the NASDAQ. A big gain here, up 7.4% in today's session to lead the upside here. We also saw the NASDAQ getting above that 50-day line for the first time in quite a while. We had the S&P 500 up 5.5%, the Dow up 3.7% today, and the Russell 2000 up over 6%. Ken, so the million-dollar question now is the bear market over? Or is this just a bear market rally? Some of the biggest days in market history come during bear markets. Where do we go from here?
I think it still needs to be viewed as a bear market rally with looking at the NASDAQ chart here with this downtrending 200-day moving average just above the 12,000 level. Remember, we had a pretty ugly session yesterday where the NASDAQ went up against these short-term moving averages, got turned away. We didn't get distribution on the NASDAQ yesterday, but we did get it on the S&P 500 when it broke sharply below the 50-day moving average. So listen, we had really strong volume in the market today, up about 25% from what we saw on Wednesday. So it definitely felt like an accumulation day. And I'm not sure if some people saying, well, maybe some short covering. And that may or may not be the case. But we're just kind of looking through the growth screens today. This was something we discussed on IBD Live, that looking at all the best percentage gainers in the NASDAQ 100. It's really all the stocks that have fallen the furthest off their highs. So we're talking stocks making 8, 10, 15% moves that have pulled back 70, 80% off their highs. So when we're in the early stages of a new uptrend, we know what stocks should look like when they're basing. We like to see a good crop of emerging leaders that can go on to be stock market leaders. And right now, just staying patient. I mentioned before the show, it's a great day to be looking at your 401k and some of your growth mutual funds that obviously had really nice sessions today. But in terms of individual growth stocks, still got to be patient here. If this rally is to be believed, we should have plenty of time to put money to work. But I didn't do much myself today for leaderboard. We added the UPRO ETF that has worked out so far. So kind of just treading cautiously, but optimistic that this could turn into something bigger.
Mm-hmm. Very well said there, Ken. So just as it was notable to see the NASDAQ get above the 50-day line, let's also take a look at some key technical levels for the S&P 500. We've been talking about the highs from a couple of days ago, right around that round number at 3,900. If we go all the way back here, that's a pretty significant level of both support and resistance throughout the majority of 2022. So to see the S&P 500 get above that level and surpass it does seem quite notable. Doesn't mean we're going to hold above that level, but I do think that was pretty significant to see.
Absolutely. It was significant price action in the NASDAQ composite and also very encouraging for the S&P 500 as well. Now we see the S&P has its sights set on that round number of 4,000. It's got that 200-day moving average just above the 4,000 level. So this will really be the test for all of the indexes. Will they ultimately be able to get back above this 200-day line? You can see several weeks ago the S&P bumped up against the 200-day line just over 4,300, got got turned away. So again, this it feels like a bear market rally, but things could change. It really just depends on what the screens are show tomorrow, what our growth screens show over the next week or two. Are we seeing more stocks participating? Are we seeing better setups instead of these stocks that are just rallying sharply off lows?
Right.
Need a little time to sort all that out. And again, for people that are 30 or 40 or 50% invested, shouldn't be too hard to get up to 60, 70, 80% invested, as long as the market is giving you, the best stocks to buy.
Exactly. And let's take just a quick look at the Dow and the Russell 2000. The Dow here, the weakest of the bunch today, even though it's been the strongest of the bunch off of the recent lows. And IW and the Russell 2000 participating today. It is now getting very close to its 200-day line. Recently got turned away pretty close to that level. And also back in August, got turned away from the 200-day line. But just to reiterate what you're saying, Ken, is that the biggest movers today were the junk stocks, the really just brutally beaten down things like apps, for example. We can go there. Enterprise software stock up 60% today, but it's still 77% off of its all-time highs. Something like Carvana as well, still 97% off of its 52-week highs, and today was up a 30-something%. So we're seeing the junk making ththese huge moves, but that's not where we want to be fishing. We don't want to be bottom fishing.
Yeah, that's right. And Nvidia is another name, had a big percentage gain today, and they report earnings next week. But here, the common theme among all these stocks, they're so far off their highs, but their 200-day moving averages have been trending lower for quite some time. So a lot of these stocks have a lot of overhead supply they still need to get through, and they may be able to do it if we see continued signs that institutional money is coming in from the sidelines, because that's really the fuel for any market uptrend. So we'll watch how the market trades over the next couple of days. We may follow through more tomorrow. We may not. We don't want to see distribution days pile up, higher volume declines. Again, we got one in the S&P 500 yesterday. So but it's okay to be patient. It's you see these stocks moving up double-digit percentage gains, but stick to your plan and stick to your routine. And if this market rally is going to go places, there should be plenty of good setups to buy in coming days and weeks.
Yeah, exactly. We want to stay disciplined and not chase and have FOMO, but to add exposure in a very methodical manner. And let's also take a look at the 10-year Treasury yield in the dollar. 0TNX here coming off in a big way today. So that obviously really helped. And of course, the market rallying today on the CPI data, interpreted as very positive in terms of inflation and what that could mean for future rate hikes or a rate hike pause.
Yeah, I mean, this was a pretty pivotal consumer price index. I think it exceeded even the most optimistic of expectations. Inflation, make no mistake, is still very high, and it's way above where the Fed wants to see it. But maybe some of these rate hikes that the Fed has done are starting to kind of be felt in the economy. But this 10-year yield, last check, was down 32 basis points to 3.82%. The inflation data, overall prices were up 7.7%, but that was below the consensus of 8%. And then core prices were also down 6.3% versus the 6.6% estimate. So the data were better than expected, fueled a lot of bond buying today. You can see this 10-year yield is right at that 50-day moving average. So is it going to hold there, or will the bottom eventually fall out here?
We'll have to see. Also, UUP, which tracks the dollar, coming off in a pretty significant way today. We've been talking about how it too, along with the 10-year yield showing climactic action, now sort of rolling over and now well below the 50-day line at this point. So that also helpful for a market rally. And then we want to take a look at ITB as well, because home construction, home builders, that theme was really moving today
Yeah,
in a
no,
pretty significant way.
yeah, it was really one of the major pockets of strength with interest rates down as sharply as they were, and home builders as beaten up as they've been. Not surprising to see the ITB show very key technical action here. I mean, this was look at the volume behind the move here for ITB, and just a real bullish retaking of the 200-day moving average here. So we'll see if it can hold above the 200-day line on the weekly, and then the 40-week line here on the on the weekly chart, and on the daily chart we'll see if it can hold above the 200-day moving average. But not surprising to see the home builders fly today.
Yeah, and you mentioned chip stocks like Nvidia, so chips really participating today as well. SMH up over 10%, so that seems to be another positive signal for the market rally if we're going to see chips participating, Ken.
Yeah, lots of volume in ITB, and pretty good volume today in the SMH too. So would be nice to see some of these chip stocks come back to life. We've talked about a few, not your household names like Intel and AMD, but some emerging leaders, and we're going to look at one in just a little bit. But home builders and chip stocks, great pockets of outperformance today.
All right, well, let's take a look at HRMY Harmony Biosciences up 2.9%. And Ken, this stock wasn't up 30% today. What gives? But no, biotech stocks also moving up on this big market rally day, although this seems like a stock that maybe it needs just a little bit more time for an alternate entry after that big move on earnings, or how do you interpret the chart here?
Yeah, I mean, this stock, I mean, let's face it, it lagged the market today. It was up 3%. Performed less than the broad market, but I'm really keeping my watch list filled with stocks that I think have the potential to be emerging leaders. So stocks that can go up 100, 200, 300%. So we look at the weekly chart here. What I like about Harmony, not only is it profitable with great bottom line and top line growth, but here's a company that came public in the second half of 2020. So it's only been a public company for a little over 2 years. This is still an early stage move. And after they reported earnings, you can see the stock soared last week, and then this week it's basically just not giving back any of that gain from the prior week. And I like charts that look like this. They show strength and support after a breakout. So I think Harmony, with that great bottom line and top line growth. You can see earnings surged in their third quarter, up 132%. Multiple quarters in a row of 40% plus revenue growth. So this company is doing a lot right, and we'll wait for an alternate entry here.
Does this qualify as a short stroke or have the spirit of some sort of short stroke? If you see a strong move and then the next week it holds tight and doesn't take out that high?
It does. It looks like it in the spirit, but typically with a short stroke, you want to see a much bigger move by a stock. So if Harmony had just say run up to the $80 level and was just a huge breakout, and then it barely budged the next week after a massive gain, that is more interpreted as a short stroke. But the fact that the stock has barely budged this week, that's what you want to see in a short stroke pattern. You just don't have a huge percentage gain yet from the breakout.
Yeah. So it's a short stroke.
It's a short stroke. Right?
All right. Well, thanks for that look, Ken. Let's also take a look at URI, United Rentals, having a strong week and an especially strong day here, up over 8.5%.
Yeah, I could see how some people might have nibbled today. We saw a lot of low volume moves in stocks, but at least United Rentals volume wasn't enormous, but it was significantly higher than what it's been in recent days, above average. So I think the stock flashed a buy signal today. And again, back you can see on the weekly chart, you can see several above average volume gains as the stock worked its way higher. Still could be in the early stages of coming out of a long consolidation. Revenue growth, it's hard to find perfect stocks these days. I mean, revenue growth has slowed in recent quarters, but that can probably be forgiven just in light of the tough operating environment that companies have had. But very liquid, market cap close to 24 billion, and pretty good estimates. And like that return on equity, 31% tells me it's a well managed company. So nice move for URI, and if this market keeps working, this one could keep working too.
Yeah, so it's clearing a downtrend this week. Relative strength line looks strong. Not seeing a blue dot because it doesn't have a base identified by pattern recognition, but it is hitting a new high here, Ken, even though the stock is still, almost 13% off of its 52-week highs from right around a year ago. But in terms of where this stock is actionable, a day like today puts a lot of stocks on our radar that maybe we're the middle of the pack. We're not really thought of until today's strong gains. Stocks forming the right side of the bases, testing potential breakout areas. But this stock is now about 17% above its 50-day line. Is that something that we need to be concerned about at this point? Or if breakouts are going to start working, does that become less important?
Well, the stock is, probably technically extended from the 50-day line, but it's also in the early stages of a breakout here too. You can see it just getting above that left side high, just over 343. So typically, when a stock gets extended from its 50-day moving average or 10-day moving average, I look at that more, after a stock has broken out. It comes down and either tests the 50-day on the daily chart, or it tests the 10-week on the weekly chart. And then from that point, if it starts to get extended after the bounce, 8, 9, 10% from the 10-week, I look at that as being a bit extended. But in a case like this, when the stock does look to be in the early stages of a breakout, I tend to look at that more than I do, where the stock is in relation to the 50-day.
Great. And to round things out, let's take a look at chip stock ACLS, working on the right side of a cut base, but one could also see this as a double bottom, which we looked at this morning with Scott St. Clair. So powering higher through that right side of the base, earnings helping to fuel some of the gains and continuing that momentum today, Ken.
Yeah, I don't disagree with the interpretation of a double bottom. You did definitely have two decisive legs down, and probably the buy signal was on Monday. But I like how volume has rolled into the stock during its recent up days. The gain today was in pretty slack volume, but I'm looking at this one again as another kind of emerging leader in the semiconductor space, and so for that reason, it's on my watch list, and I'll wait. You can see it's been a pretty explosive move when it went over that 60 level. So now it's a $75 stock, probably a little stretched here, even based on that 68 that double bottom pivot point. So I'm going to wait for it to just pause and consolidate and get a new entry. But this one is showing showing good action, and showing that it might have the potential to be a market leader.
Great. Well, thank you so much, Ken, and thanks everyone for tuning in. We'll be back with more fun tomorrow morning on IABD Live, where we will be joined by Joe Fahmy of Zor Capital. So we'll get his take on current conditions, how he's positioned stocks on his watch list, and so much more. So make sure you join us at 6:20 a.m. Pacific, 9:20 a.m. Eastern at investors.com/IABD Live. We'll see you there tomorrow. And we'll also see you right back here tomorrow after the close as well.